Good afternoon and welcome to the end of day review for today. And today is March 11, 2024 and it's Monday. So this week we have a high impact news. We're coming out tomorrow at 8:30 Eastern Time. It's the CPI data. And then on Wednesday we have the PPI data. So the CPI is consumer index. Right, consumer price index, and then the PPI is the producer. One is supply, one demand right there. One demand and one is supply. So we have a CPI on Tuesday, tomorrow, and we have a PPI for producer on Thursday. I'm sorry, we mixed both. I thought that the PPI gonna come out Wednesday, but it's come out on Thursday. All right, we are in 1 more minute. We close. We hit a ring bell, and we are in the week 11. 2 more weeks. We close the first quarter of the year. So 1 year, 52 weeks, and divide by 13. So it's 4 right there. The same like you have a stack of cars, right? You have 52 cars, divide by 4, you have 13. So that idea of the quarter theory also, everything is divided by 4. And we also have option expiration for this Friday is standard, and then the end of month and of quarter. So March is huge. Like I mentioned earlier, we just hear the closing bell right there. So we just mentioned earlier, tomorrow we will have March 12th CPI data release, and then the week after this week we will have FOMC meeting. This is the big impact news that you can expect in the stock market or financial market. All right, that's enough for the economic calendar. So keep in mind, we need to pay attention for this event, because this event will drive the markets. We drive the volatility in the markets, and we love volatility. The whole idea is that we want to catch the move, right? We risk very low. If we wrong, then we wrong very fast and very quick. But if we right, we can ride on our winner and catch the move. So whenever there are volatilities, there are chaos, if we are equipped enough and trained well enough, we can capture those moves and reap the reward. All right, so let's see how the market is set up for tomorrow. So the Friday, it starts sell up at 10, 10:30, 10. Basically, it's the Judah swing. Friday, we have a Judah swing. See, it should be Judah swing at 9:30, and around 10, it starts sell up. And the target gonna be the opening gap that left unfilled from Thursday. And let's look at the model that ICT gave us. So right there, this is the model. You have regular or this is run before the Judah swing is before, so prior 9:30 open. So this is not the model. This could be, yeah. Oh no, this is a Judah swing at 1:30. Look at that. Okay, so we believe this is the model right here. Okay, so this is the model that we can apply for Friday, but this is for what? This is for so this is for the long, right? For the long setup. But if we flip this model, it can be a short right there. So basically we mark the high and the low from Friday, which is Thursday. Let's look right here. Look carefully, you see that? So we have the PM section for Thursday. So let's say it start at 11:30 right here, 11:30, and look at this. So we have it here. All right, so that is our Thursday prior day PM session. And look at in the 9:30 swing right here. You see, it's the setup. You see, this is a swing, Judah swing, which is very quick, very fast. You see, very low resistance right there. So this is the manipulation move right here, and then it's distribution. So right here is a accumulation right here. Accumulation. Then you have what? Accumulation, then you have a manipulation, and then you have the huge distribution right there. So that's the idea of trading quarter theory based on the model ADMX. A stands for accumulation, M stands for manipulation, and D stands for distribution. And X can be a reversal, or it can be continuation right there. So the reason why we want to review this model every day, so we want to make sure that we observe this model. It will be in the back of our mind right there. So we trade at a subconcept level instead of just analyze and thinking. We just take action and being the model instead of let the model is outside us. We turn the model inside us, so we become the model right there. So that's the whole idea, and it takes practice. So right here, exactly, right? We have the swing, Judah swing, 9:30. Take out the bite side, and then at 10, exactly. You see that? At 10, right there, it creates a level. Mark that level as soon as at 10. You see that? Mark that level, or we mark the level just below that. As soon as we see that this level got rejected, we short them right away. And we're gonna have the huge reward, very low risk. So that's the model on the ICT right here. Exactly this model, but we just flip them. This is the long, right? We will anticipate we're long, but we flip them, it's going to be a short right there. So it's the Judah swing 9:30, start 9:30, and the 30 minutes to what? To set up the liquidity. So this manipulation, this engineer move to set up the liquidity, all the liquidity out here, right? For this move, as soon as at 10, it's gonna start show up to rebalance this area right there. You see that? There's the move, and not only is rebalance, but it's gonna come down and also rebalance the unfilled liquidity void gap right here. By the way, ICT, he called this is open. Right, look at the model. He says open range gap right there. Open range gap right there. But we try to add a little bit more. We say void. It will be critical if we have a void right there. Because sometimes there are a gap, but there's not a void gap at all. Let's see right here on Friday, right? The open right here and the close right here, there's a gap right there. The gap for open and close of the previous day, but it's not really a void. We want to see something like this. With something like this, that's the void right there. It tells us that the market is sending a very strong signal. That's all we can say for lack of a better word. Right there. So basically it goes to the model. So this model we can apply in both long. I'm sorry. We saw it right here. Yeah, the swing right here. Right. So it's flip. We apply on Friday. Well, that's the model we apply on Friday. And let's see if we apply this same model for today. But if today is a little different, I mean, we can say that we apply the same model for today, because at 9:30 we also see we see a euro swing, but in this case swing down, which is take the sell side liquidity. But on Friday is euro swing up, take buy side liquidity. This one is swing down, take sell side liquidity. So we see the opposite right there, but the concept is applied the same. So as soon as we see the euro swing happen, then look at around 10. In this case, yeah, 10 right there, 10. We start see mark down that level. At 10, you see mark down that level. We see rejection, go short. In this case also, we see rejection and let the auto block form. Then we see it gonna become a short level. This one will be resistance level right there. And we go short in this case and go long in this case, euro swing. But we can see the condition, the liquidity for today and Friday a little bit different. On Friday we have a huge accumulation right here. That's the reason why the swing yield is very big in order to set up. And you see the huge distribution because the liquidity accumulate around here is very huge. So it needs a huge distribution right there. But for today, we see that the day before there's not much liquidity sell side liquidity much left. That's the reason why the euro swing here is kind of not so strong, right? Not so strong. Then the reverse. Look at the reverse. It's very hard to trade right here for today. The run-up is kind of very choppy. So if anyone who go long after this, have to be very patient, because if we target here, right? If our target gonna be right here, we have to wait until 1450. So if we're going around here, let's say we're going around here, 1025, and then 14, we hit the target right here, the void open range gap right there. So ICT is called a open range gap. We just put the V and just specialize or special mass not specialized, but it's just give it more details, which is the void right here, the empty space right there. Give it more clarification. So basically, if we enter right here, we wait a very long time to get to our targets because it's a very toppy move. The reason why is have a toppy move because there's not much buy side liquidity for it to go and wrap them. Not much. That's the reason why it's very toppy. Right? In order to go up, you need the people to go and buy it, but not much the buyer for today. That's the reason why it's very toppy. But we can see that it set the sell side liquidity right there. It set up the sell side liquidity. Let's say it's gonna rip the sell side liquidity in a manipulation move, and then boom, roll it back up. Let's see how the CPI gonna gonna try the market move. But go back to the model ICC. So we can apply this model for today, but in more accurate way. Right here, it didn't tell us about this model doesn't tell us anything about a void open range wrap, but if we look to the second page, we see exactly the model that apply for today, because we have the gap. We have an opening wrap, opening range gap, the void opening gap wrap. We can apply exactly this model for today, and you see that it swing, Euro swing, it swing low right here. You do Euro swing lows. It's not really fast and furious, but it's fast and furious enough to give us confidence that it's gonna fit into this model. And then you see the auto block and retest a little bit, and then boom, go back there. But it's very choppy. The way it is right here, it's very accurate. It's very choppy to go up to hit the target, and that's exactly what happened for today. You see the moving up is very choppy, so it's very it's not a low resistance liquidity run, it's very high resistance liquidity run right there, very high resistance liquidity run right there. That's the nature of this model, so we have to be patient. Very tricky to trade this model, and we did see that later on. We reviewed the trade we took. So the high overview that we can apply the ICT model. I think we did take a screenshot right here. So yep, here's what we call them. So basically a 4 breakout, we level, we create, we look at the 10-hour, we mark the low, that is a breakout level right there. If we break above that level, then we're gonna do a buy stop. So it become a 4 breakdown or 4 breakdown. Oh yeah, 4 breakdown. But we need to see the condition, which is a void gap down, or void opening range gap right there. We need to see that, and then we see that at the opening you see the order block, the bearish order block, and then it leaves that order block. It make a very swing, right? It was swinging in very fast and furious, which is so-called low resistance liquidity run right there to the outside. And then at 10, around 10, you can see that the reversal is in place. So the Euro swing from 9:30 to 10. So it's based on time right there. It's such a good rate. Then we're gonna put our buy stop in. See the auto block form right there? Right through so-called spot level. Then we have a nice run right here, 1 to 5 risk to reward ratio. And if we let it run up until here, we can have 1 to 6 risk to reward ratio. So we get around 140, 1240. So that's the whole idea of ICT one trade setup for life, which is based on the gap down and the Udall swing at 9:30. Man, it played out exactly. How accurate is that? Look at that. It's like a perfect painting picture right there. You have a volley, opening range, gap down, right? And then you have a 9:30 Udall swing, and then boom, it's reversed, but a very toppy. And it reached the target right here at, you have to wait a long time. You have to wait almost 4 hours, right? From 10, around 10:30, right? 10:30, 11:30, 12:30, and then 13:30, and then 14:30. So it's almost 4 hours. Wait 4 hours for the target to become very toppy. So all of this is require lots of patience. We need to know the model so we know exactly where they're heading to. Otherwise, we're gonna get caught up into the swing right here, and it will be easy for it to get stop out our position right there. Okay, let's see the trade we trade today. I do show trade, but it has some error. It didn't show anything for now. Maybe we have to reboot the application, but we're not gonna do it right now. But the whole idea right here, we enter right here. We mark this level, right? Breakout level right here, and then breakout level right here. So when we see it break down the level, and it go up, we thought we're gonna short them because it's gonna be a real breakout. So actually 4 breakout to the outside. I mean 4 breakdown to the upside, but a real breakdown to the downside. We almost, and a short right here, but we wait and then we see, wow, there is a rejection right here at this breakout right there, and also at the open at 9:30, which is the open new week opening right there. So this is the new week open for this week. And then when we see that, we said, wow, definitely going to be a real breakout of the level. So we put a buy stop in here, and it carried us to the trade. And we sit through 10 minutes of scary moment. We thought it's going to be jump, boom, go hit our target with 0.5 standard deviation from the DR model. But it did not. It's crazy. That's the reason why we have to know our model well. Otherwise, we got stop out. So as soon as this candle form, we move our stop loss. Basically, our stop loss in the first time when we entry, we put right here, right? We put a buy stop right here, carry to the trade, put stop right here. After this candle form, we say, that's enough for us. We're not gonna want to give back again, so we put our stop loss just 4 cents below this, and below our entry, and we got stop out, so we lose 4 cents. Let's see here. Let me switch to something to see if we lose 4 cents. Yeah, we lose 4 cents right there. Yeah. So we take right there. However, we re-entry. We re-entry right here. After this episode, we said, wow, it's the order block right here. Clearly to us, it looked like an order block. So you see this order block, it respects this order block. And then you have another block following, which is called proportion block right there. And then you see this supposed to be a Dow close and breakdown, but it's not. It got rejected. So this order block still holds. So as soon as we saw the candle open down here and it moved up, then we put a buy stop in here. And our target is the lead level, and we get out. So we get 1 hour. Let's see how many hours we got right here. So yeah, so 20 and yeah, like 2 hours. So basically we get 2 hours. I think we did take a screenshot of that, did we? No, this is not the screenshot that we talking about. I think this one, yes. So we enter right here. See that? We put our. Oh, we am at that right. This is the 015 standard deviation based on the DLR model. But coincidence is overlap with the buy sell quality from the Q1 right there. So it's very high quality setup. So reach ratio is 1 to 2 right there. So basically we re-entry and it hit our target at 10.50. That's our entry. However, when we re-entry here, we use option to entry them to let you know, so it not show up in here. In case just you just wonder. So as soon as we get out, you see that? It's very accurate. If you don't get out, you pay huge. You're gonna pay for the loss again. Because we see right here, we enter right here. If we don't get out right here, we got trouble because the market is very toppy for Monday. Monday is the accumulation. Q1, right? For the week is a Q1. It's accumulation. And in this case, we saw its accumulation, the sell liquidity. So we want to what? We want to see on Monday, no, sorry, on Tuesday, tomorrow, we see a manipulation. So we accumulation the sell side, and then we manipulate the buy side, and then boom, go and down and rip order sell liquidity. That's the bearish scenario right there. What is the bullish scenario? We don't know for now. Yep. But basically it accumulates the liquidity for today. You see from the gap it opened, there's the huge liquidity around this level that it accumulate. I mean, let's mark the last support level right here, right? That's the last breakout level we have. What is that? Okay, this is the last breakout. This is on low time frame, but also it's very close to the high time frame right there. One right there. And here's the last breakout level that is touching. It's very critical, and you see very interesting that it's close above above the Friday PM section low, and also the breakout level on high time frame, and also we see it open. Actually, it's closed above the open for the week. So let's see. Let's watch this level, this range, especially the overlap with this range. See how the market gonna react to this trend. Give us some idea. We're gonna either see a fall breakout from these two levels or a real breakout. So we will see. Let's I think we are almost, I think we reached 30-minute mark of our time for recording, but let's look at the 1 hour time frame. 1 hour time frame. Wow, here look at the 1 hour time frame. You see the range we put right there, and this range also important right there on the 1 hour time frame. So we have this level. This level is well balanced. That's the reason why the price really want to go to the stay around that one. But after it rebalance, maybe it's gonna go up and seek the efficiency imbalance right there. So far, after it hit the buy side liquidity, external range liquidity, right? The whole idea of the markets, it moved from, you know, external liquidity, range liquidity to internal range liquidity. So it moved from ERL to IRL, which is stand for external liquidity range, like external liquidity, external range liquidity. I think range. So it's not just a point, but a range. Is it a yes, a distance? It's an internal range liquidity, liquid or liquidity. So for internal liquidity, external is gonna be high low. For internal, it's gonna be a PDRA. That's a it's gonna be the favorite, the easy one to trade is the fair value gap. And then after that we have, you know, order block. We have a breaker block. Okay, so that's, you got an idea. So on the 1 hour time frame, and we observe right here, as soon as it rate this buy side liquidity, which is the internal liquidity, then it seek all this fair value gap right there, this gap right there, the void gap, it seek all the internal liquidity or the unbalance or inefficiency right there. I see all of that. Or in this case, you can see this is breaker. It break this breaker right there. You see that, the fair value gap, the huge setup right here, the fair value gap, the bullish breaker, fair value gap, retest, and you see it bounce very frequent there. But you know, someone step in and show it, so it break down this bullish breaker right there. But we're gonna watch this level. Maybe it gonna make a fall breakout at this level. We have several levels to watch. This level, and maybe this level also. So let's put it on the Josh. So yeah, this key level. What the high of this one? 07, 06, very close. 607, and we call this a breakout level X1. Basically, it's a bullish breaker, but it will break. You see, it will bullish breaker, failure gap, but it retests that, but it break it down. So let's see how it handled. For tomorrow, we really want to watch this level, and this level. Then we can trade accordingly right there. But like we say, we know that Monday is accumulation, and so far we saw its accumulation sell-side liquidity. Oh, this one saw the trade right here. So look at the one with Dow. Yeah, right here. So we see that a lot of sell-side liquidity accumulation right there. So based on the quarter theory model, ADMX, accumulation, manipulation. So we're looking for the manipulation tomorrow. And after the market show us the manipulation, then we can do turtle soup, and we're gonna go for the distribution. Because the manipulation will be made, then the distribution will be the opposite of the manipulation move right there. So if it moving up, the manipulation moving up, then the distribution gonna be moving down, and vice versa. If the manipulation gonna go down, retest this order block for that matter, and then the distribution gonna be up. I think it's gonna go up, but we don't want to make too much prediction on that. We are gonna create a bias and we try to be right, but we see a lot of inefficient here, a huge gap right there. If we see that, you see the huge unbalance right here around this order block. Yeah, we can see that. You see huge right there, and we also have a yeah, this area already unbalanced, but you see right here, you can see that this is a look at this setup. We see this is a breaker, a bearish breaker, and you have failure gap below that. So looking for a short setup that go into that direction. Look, right? So we have right here, look at this failure gap. Yeah, or maybe this already play out, we don't know. You see the gap right there, and the bearish breaker, and this one is retest, and then boom, falling down. So the short has already played now. And right here we have the long setup is still intact. You see that the order block, failure gap, and now it's retest the order block, and then it bow back. So look for the two level around here and here, maybe here. It already retest one. I don't know if it's gonna retest twice or not, but certainly it's the level that we need to looking for tomorrow or for this week. All right, we go over time, 8 minutes. Thank you for your patience. We're only grateful for this opportunity. We love, we do what we love, then success is come to our way. Bye for now.